Hello and welcome to Flutur's trading experience. I don't have any experience in trading and this is not a tutorial. This series of videos is a journal of a novice in his first steps towards becoming an experienced trader. In these videos I'm going to share the things I learned every day and I am going to publish my live trades. Hopefully you can learn from my mistakes and make some conclusions for yourself. So let's begin. The first thing I learned about trading is the 90-90-90 rule. I'm sure you've heard it by now. 90-90-90 is a well-known statistic and it says that 90% of traders lose 90% of their investment in 90 days. So the big question is, how can I be in the 10%? Well, first I try to understand what are the mistakes that other beginners make. I've studied the free available courses on forexfornoobs.com. I've watched the BBC reality show Millionaire Traders, and I've looked into Anton Kreil, who is a top experienced ex-Goldman Sachs trader and the founder of the Institute of Trading and Portfolio Management. I'll have the links in the descriptions. So, what did I learn? Well, most of the traders lose their investment because of 4 factors: conflict of interest, trading for income, trading platform seduction, and informational overload. So, the conflict of interest. Brokers make money from commission, price, and volume. They don't really care if traders such as me and you make money. They're interested that the traders make as much trades as possible. That's why they encourage trading, provide free platforms, methods, strategies, and easy-to-use accounts and leverage. Experienced traders, by the way, don't use the high leverages that the platforms offer. Experienced traders usually use leverages 1-to-1, 2-to-1, 5-to-1, maybe 10-to-1 sometimes, even though platforms offer 100-to-1 or 500-to-1 leverage. Yeah, I can understand the allure of trading with a 100-to-1 leverage, for example, because you can double your account real quick. The broker lets you trade with 100 times more money than you actually have, when you actually invest. But the truth is, yeah, you could double your account, you could triple your account, but you can lose all your investment in just a second if the trade goes the other way. So this is a very risky thing, so we should always be aware of a conflict of interest and question everything. Okay, let's get on to the second part, trading for income. This is a bit strange. Why is this a mistake? Like, everyone's trading for income. Well, the truth is, if you trade for income and as soon as you make money of your account, you take your income and spend it. So what happens when you lose? Well, if you're trading for income, by the end of the month, it doesn't matter you won or lose, you need money, so you take it from your account. So basically what happens by the end of a year, if you get by the end of a year with this account, in the best case scenario, you'll have the same amount of money on it. In the worst case scenario, which unfortunately is the most probable, your account will be wiped. We as new traders need to understand that trading is not a get-rich scheme. It's a business career which requires investment of time and money. So, in conclusion, we need to invest risk money in trading and not trade for income. Okay. Getting to the third one, trading platform seduction. There are a lot of platforms available, each better than the other, with built-in strategies, indicators that build confidence, and they're all user-friendly and everything is designed just to seduce the user into pressing the button and buying or sell stock or currency. We are seduced to use all these platforms with all their flashy buttons and beautiful design and easy-to-use strategies. But we need to remember, the platform is a tool. The tool cannot make you talented and successful. Having a $2,500 digital camera does not make you a successful photographer. Or having the best trading platform available does not make me a successful trader. Don't fall into this trap. Learn how to trade using your brain. Fourth factor, informational overload. There are a lot of websites, seminars, TV shows, YouTube channels, newspapers, internet DVD courses. They provide a huge amount of information. The problem is not just that it's a lot of information and it's hard to pick the one that is really useful, but also there is another conflict of interest here. All these projects, they're interested in an audience. They need to hit their rating. They don't really care if a trader makes money or not. They use any means possible, just providing an overload of information that is not always accurate. So these are the factors. We took a look at them and we'll try to keep them in mind in order to become part of the 10% successful traders. What now? Well, to begin, I've written down my trading plan. Where I have my goals and overview, I identified some of my problems and things I need to overcome, and I came up with a set of rules that I need to follow. And I decided to start with currency for now and get into stocks as soon as I'm ready. But just for learning purposes, I'm gonna work with the United States dollar, the British pound and the euro, just because these are some of the currencies I'm a bit familiar with. And I'm going to work on relatively small time frames, 4 to 8 hours and 1 to 3 days. Even though experienced traders recommend to work on longer time frames, because there are a lot of professionals working in investment banks and hedge funds that use computer algorithms that are almost impossible to beat on smaller than daily trades. But just to make our learning faster, I'm gonna work on small time frames for now and get into longer ones as soon as I'm ready. Yeah, and I've also written down some of the things I need to check up before going into a trade. And here we have my method, which is not a method I came up with, I just picked it from lots available online. This one is mostly based on Nick B's advanced price action method from forexfornoobs.com. You'll have a link in the description. So yeah, here we have some fundamental triggers we need to be aware before going into a trade, even though for now most of my trades would be based on technical analysis, on reversal trades, candle analysis, trend lines, moving average conversion diversion, and the Fibonacci. I've also set up my target and stop loss to 30 to 50 pips and minus 20 pips. If you're new and you do not know what this means, well, the pip is the point, the percentage in point is a unit of change in an exchange rate of a currency pair. And you need to set up a target or take profit. For me it's from 30 to 50 pips, just not to become a victim of your own ego and greed. You just need to learn to get out of a successful trade as soon as you hit a profit target. And for the stop loss, basically what this means is, even though you've done all your technical and fundamental analysis and everything suggests, for example, that in a euro-dollar trade that the euro is gonna go up, so you go long, you buy the pair, and after a small amount of time it just starts going down, and as time progresses it goes down, 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 but you've done your analysis, you're sure it's gonna be up. So not to be a victim of your own ego and self-confidence, you need to set stop loss. and you need to realize that you lost and get out of a trade, and not wait the market to reverse, because like there is a well-known rule, the market can be irrational longer than you can stay solvent. So you need to understand this and get out of losing streaks. And yeah, and another thing is that a successful trader, he has an average 50 to 50 lose to win ratio. So if you are a successful trader and you have a target 30 to 50 for winning, minus 20 to losing, and you have a 50 to 50 winning to losing streaks, you'll be a profitable trader, and you're gonna make some money. Also, be sure to take into consideration the broker commissions, the spreads, and all that. Yep. Yeah, and I also written down some money and risk management guidelines. For now, I'm starting with a €100 account, and my plan is it's an ambition goal, just to grow it to €125 in 30 days, to have a 25% profit, and to try to always have positive week. We'll try to do that. And some of my risk guidelines here. By the way, this is a Google Doc, and you'll have a link in the description, and I'm gonna update it dynamically. Yep. And yeah, I've also I created a trading journal, where even though your broker is going to keep track of your trades, but I just want to have it my own way. This is dummy data, by the way. This is just example, so I could format the data and present you the trading journal. But I'm gonna write down the entry and exit date for each trade, the type of a trade, long or buy, or short or sell, the pair, the lots, risk percentage, gain percentage, the stop loss I've set up for it, the take profit, entry and exit. And I'm gonna also write down, fill in the entry reason, the entry thoughts, and my exit thoughts. And I'm gonna write down whether I'm sticking to the plan or not with this trade. I'm gonna calculate the duration of the trade and the risk to gain ratio, and I'm gonna write down the profit loss in pips. I'm gonna try to stick to a 1 to 4 risk to gain ratio as often as possible. Yeah, so the main reason for this journal is not just keeping track of my trades, but to analyze it from time to time and to learn from my mistakes, to understand maybe am I having profits on long trades or on short trades, or like all the factors that are into it. When I have the full picture, maybe this will provide some good data for analysis and learning. Yep. As for the trading platform and the broker, for analyzing, I'm going to choose tradingview.com, which is a freely available platform. I'm actually quite impressed by it. It has a lot of interesting tools you could use, like for drawing your support lines or any other lines you need. Everything is customizable, the line width, the line colors, and there's a lot available actually. Arrows, rays, everything you could think of, tools for measuring. This is a really good platform, and it's also for free. There is a pro version, of course, but for now I think we're gonna stick to the free one. Yep, and also it has, if you see this green little dot here, these are trading ideas, see? And if you have them on, you could see other users that are sharing their ideas, and you could just have to wait for a second. And we could see other users' ideas for trades with descriptions, with analysis and everything. So this is quite good for a beginner, even for a professional. Yeah, but remember, always use your brain and question everything. Yep, so for analysis we're gonna use tradingview.com. For the broker, I'm gonna go with eToro, which is also a very interesting broker. It's a social trading platform. What this means, you could see other brokers' spots and even other brokers' trades. So you could copy their trades. You could copy one of their trades, or you could copy consistently their trades, just set up an amount of money that would always clone their trades. So this is quite interesting. We'll take a look into that. I'm not gonna obviously just be copying all the trades all the time, but maybe I'll have 20% of my budget available for copying and see how that goes. Yeah, also eToro, eToro has an analysis. It also has obviously the buy and sell. It has currencies, it has stocks, it has indices, it has most everything you would want from a broker. You could see I have on my demo account a trade going on, and yeah, it's a quite good broker. It's NFA approved. The spread is a bit big, and it has some commissions for over weekend trading and for inactivity, but for a beginner it's a solid trader, and I'm gonna stick with it. It also has a lot of payment methods, so it looks good. So I'm gonna be using eToro for now. And yeah, that's about it. So what are we going to trade? Well, now I'm not gonna go and trade anything because well, first of all, I want to keep this video as an intro, and also today is May the 5th, and today we have a bank holiday in England. So, and if I decided to work with Euro and the British Pound, so it's not recommended, I think, to just go into the game when such a big player is not playing, because the market wouldn't be so stable as always. That's my opinion for now. And also, according to daily FX, the euro and dollar has done very little to anything in the past few weeks. It's not volatile at all. But yeah, this looks like just a silence before the storm. So I think something big is coming. So I'll plan my first trade for tomorrow, and I'll be sure to let you know what I've decided in the next video. So this is it for now. Thank you for watching. Please let me know what you think about the videos, what changes and new info you'd like in the new ones. Bye bye.